Okay, I think we're live. All right, welcome back to my channel. Today we're going to answer the question that most people may not even think to ask, which is why is it that housing costs are not included as part of the government's inflation estimate? By that I mean the consumer price index, right? Now you may be surprised, but yeah, there's a reason for that, and we're going to get into why that is. But as you can see, right now there are a lot of headlines about both housing and inflation, right? So today we're going to connect those two markets, right? Those two things that are happening in the economic news because one is clearly impactful to the other. A lot of people think, wait a second, hold on. I'm buying a house and it's necessary for me to live there, right? And you're telling me the price of housing going up is not part of inflation? Isn't that what inflation is, right? So we'll dig into the rules about, the CPI and why that matters. But also we're going to talk about what that means for you. If you're in the market for a house, right? And if you're also concerned about the consumer price index, about rising inflation, we'll tease out the relationship between those two and figure out what you can do. So let's begin with looking at a headline that is a little bit of an alarmist. And as you know, my channel is about unwinding that sort of stuff and placing the economic news, the economic data in its proper perspective. Okay, so let's take a quick look. So here you see, this is actually an article from CNN, right? Where they're talking about an inflation storm that is coming for the US housing market. Now, what is that supposed to mean, right? Well, intuitively, we kind of understand that uh, what it's trying to say is, housing, the price of housing is going up and up. I think we all know that. We've seen it in the news, so on and so forth. But the article kind of explores the relationship between the official government recording or measurement of inflation and the housing market itself. And the article does a nice job, but I want to get into a little bit more detail, right, and explain how that works. And so let's continue on with um, the data itself, because what we want to do is first we're going to outline what's happening with house price, the house price movements, and then we're going to talk about the consumer price index. And in this chart, excuse me, I'm still having allergies, so excuse my breathing. I hope it doesn't bother you too much. So um, this chart is a graph of housing prices and the consumer price index, and isn't that exactly what we're talking about, right? So in starting to understand the relationship between the consumer price index and housing costs, right? We're going to look at this chart and we're going to examine the relationship and how they behave relative to each other. And when you look at this chart, you're going to realize, or at least it appears, that the idea of leaving housing costs outside of the CPI seems a little nonsensical. So let's take a look at this chart here. Okay. So what you're seeing is, like I said, a chart of housing prices and the consumer price index, and it goes from 2000 to 2021. It's pretty recent data. Now, if you're not familiar with the Case-Shiller housing price index, it is basically just think of it as an estimation of housing prices for 20 of the biggest cities in the country. And the reason why that is a useful index is because the housing data for some of the largest metropolitan areas is actually quite dependable, right? And sometimes in some of the more rural areas, house prices and their fluctuations are hard to measure. But because there's better information, there's typically more transactions, right? So the Case-Shiller index takes a measure of the major metropolitan areas and estimates that. And then, of course, that's the blue line. So in the, I guess that's the beige or orange line, whatever you want to call it, that is the consumer price index. And the thing that strikes you in this chart, and I think it does a really good job of this, is here in this gray area. It is basically showing the difference between the Case-Shiller housing price index and the government calculated consumer price index. And you see there is quite a bit of difference, right? Um, there's quite a bit of rise and fall in the housing price index, and of course the consumer price index is a little bit more stable. I don't mean stable in terms of prices, but in terms of this chart, the rise and fall is pretty steady. And so um, when you look at this chart, right, you kind of have to ask yourself, with all the variability of the home price index, and the fact that it is probably one of the biggest expenditures that most people have, how does it make any sense to leave it out of any official calculation for inflation? Well, let's get a little bit more into the reason for that. Okay, this is more of the kind of economics that I try to convey in this channel. So let's take a look. Okay, and this is the actual explanation for why housing units are not in the CPI market basket, right? So reading from this text, like most economic series, the CPI views housing units as capital or investment goods and not as consumption items. Spending to purchase and improve houses and other housing units is investment and not consumption. Shelter, the service the housing units provide, is the relevant consumption item for the CPI. The cost of shelter for renter-occupied housing is rent, right? So let's take a pause here and think about what exactly it's saying. So the reason why economists don't typically want to include the purchase of a home in any kind of inflation measurement is the fact that, you know, housing is not typically a consumable good, right? You don't buy a house, you consume it, and then you have to buy another house. Another way to think about it is, a consumable is, let's say, a bag of potatoes, right? If you buy, a bag of potatoes and you put it in your kitchen, right? The value of those potatoes are not going to go up in the next 10 years, right? But housing very well might. And that's why it's a different kind of asset. We call that an investment or a capital asset. So I think you start to get the idea of why we consider housing to be something separate from the official inflation count. Now, that does not mean that we are actually ignoring the effect of house prices in the CPI. In fact, as the text explains, let's go back to that. Okay. As the text explains, the cost of shelter for renter-occupied housing is rent. For an owner-occupied unit, the cost of shelter is the implicit rent that owner occupants would have to pay if they were renting their house, right? So basically, what this explanation is saying is that the purchase of a house is not a consumable transaction. It's not a commodity. It's not. You're not buying a consumable. It's actually an investment. But the act of renting a house, renting an apartment, is where you actually consume the residence, the home, or apartment complex, if you see what I mean, right? And so housing is considered a capital investment. Renting is considered the consumption of that facility, and the cost of shelter, which is estimated by the price of rent, is what's included in the CPI. Okay, if that makes sense, right? So we are making a distinction from the two different types of transactions, right? Buying a home is, let's just make it simple, it's an investment, and renting a home is the consumption, right? And renting a home which is basically the cost of shelter, is what is included in the CPI. Now, it's understood by many economists that this type of measure is not, without its flaws, but estimating, the cost of shelter and trying to say that buying a house is actually consumption, it gets all very complicated. And so economists are trying to tease out the nature of the actual spending that consumers do and including that in the official CPI index. Okay, so let's continue on. Um, and so the uh, article was noting, okay, the text was noting that when the CPI, uh, the Bureau of Labor Statistics, right, tries to estimate the cost of the consumption of housing, right, it estimates what's called the owner equivalent rent. And basically what they're doing is, right, they are asking owners, if you were to rent out your housing unit, how much would you charge? How much would it cost someone to come in and say, hey, you know what, I would really like to stay here, and what do I have to pay? So in that sense, it's estimating the cost of consumption or of actually consuming the home that was previously bought, right? So looking back on this chart, okay, so then the question becomes, how well does the owner equivalent rent reflect the increases in housing over time, right? And that's really what this chart is showing. We don't have to get into all the technicality of this stuff, but you know, I mean, uh, so the blue line is owner equivalent rent. Basically, what we're saying before. How much would it take to rent out, for example, that single family home? And the green line is the fixed income real estate real house price index. So again, not wanting to get into all the technicalities, but you can simply think of the real house price index as what it sounds like. It's an index of housing prices for the country, right? And so this chart has some kind of some nice information. For example, we all know starting in around 2005, 2006, we had spikes in the price of housing, right? That was the housing bubble, and you saw that it's actually starting to go down around 2008 to it has a major downward trend, um, and so as you see in this period around 2006, as the prices of homes start to go up, you see that the equivalent owner's equivalent rent is also going up. Now, there is a slight delay in terms of when those market transactions take place. So you can kind of think of it as saying, you know, um, once people are starting to buy up homes, right, and drive up the price of homes, that's taking housing units off the market because people are already living in there, and so the price of rent can also start to go up. And of course, there are other factors that drive up rent. For example, in this current pandemic, there were a lot of people leaving the big cities because because of COVID safety standards, lockdowns, and people feeling like they wanted to get a little distance from everybody else, right? And now they're all rushing back, right? So right now, rental prices are going up very, very rapidly, right? So now you kind of see the connection between inflation, house price movements, and the cost of rental. They're all interconnected. They're like dominoes that fall, one after the other, right? So continuing on, um, so this is basically explaining what I discussed right now, but a little bit more detail, right? You saw in the previous chart that we talked about the owner equivalent rental price, right? So reading from the text, rents reflect the price of consuming a flow of real estate services at a moment in time. Of course, many homes are owned by the occupants and not rented. Therefore, the calculators of national accounts generate something called owner-occupied rents, which is, in fact, basically the blue line that you're seeing here. Okay, this is the actual data that it's talking about in terms of generating numbers. So called owner-occupied rents, which is an attempt to calculate what the rents would be on homes that are occupied by their owners. This measure has problems, but for many purposes, it is quite adequate. Now, when the text says that, you may not agree with that. I understand. As a layperson, you're going to likely sit there and say, are you kidding me? I can't even afford to buy a house. I can barely afford to rent anything, right? So housing prices are a lot more expensive. Rents are starting to go up. And you're telling me that it's only a small component of inflation? Well, I think you might actually have a point there from a practical point of view. But in terms of constructing an objective, a price index, right? An inflation index, one thing that we have to concern ourselves with is that one period, 1 month or 1 year of inflation data needs to be what you need to be able to compare it to a previous year, right? Excuse me. So that's why um, because buying a home is a long-term investment, right? So the price of that continues to fluctuate up and down. So it kind of messes up, the any kind of inflation price index in its ability to kind of, to be able to compare one period versus the other, right? And you saw that, the CPI was actually quite stable in terms of its rise, well, relative to housing prices, but housing prices are much more, um, let's call it bouncy, if that's a word, right? I like that word, bouncy. Okay, so let's continue on with the analysis. Um, and now, of course, uh, your criticism about rental prices going high is very well taken because, you know, um, this is data from May 2021 versus February 2020. And in the big coastal cities, rental prices are spiking quite significantly, right? Now, so if rental prices are now, you know, you know, are if rental prices are now starting to go up, right? Eventually, the CPI will start to reflect the increase in that. And if there is any kind of factor that contributes to inflation, right? And remember, I've been talking about, CPI. I've been talking about inflation in the previous live streams, and I made note of the fact that it should be, and very likely will be, a temporary thing. Temporary meaning, probably not much beyond this year, right? Um, so I still hold to that belief. The Federal Reserve still holds to that estimation, and I believe that they're correct. Um, but if there is one component to inflation that I'm willing to acknowledge may persist for a couple of years, right? More than what you would call temporary, it is the cost of housing, right? I do not believe that house prices are going to go in a downward trend anytime soon. Well, they may moderate. The rate of increase will certainly moderate, and I'm going to talk about that in my next update. But in terms of having any kind of a crash in the housing prices, I think that's very unlikely. And so that's really the point um, to take away from here, right? Um, you know, let me show you the final quote that I want to put before you. The outlook for rents is key, said Mr. Slock, chief economist at Apollo Global Management. With rents going up as the economy reopens, we will continue to see more upward pressure on overall inflation. And I include that quote because I agree. I think based on the data, and what we see both in terms of the housing market and what's going on with rental prices, with all the millennials and young kids moving out of the city and then moving back in, right? Both housing prices and rental prices are going up, right? And those are demographic trends. They are not the kind of supply chain uh, issues that are temporarily driving up the cost of supply for many items. For example, computer chips. The car market is having a lot of problems with that, including cameras and computers and whatnot. So um, that's the explanation. If you're thinking it's crazy that housing prices is not included in official accounts of inflation, it's because of the whole different asset classes, right? Housing is an investment, but there is, to put all that into proper perspective, there is consideration in the CPI for housing costs, and it is the cost of shelter, right? And what does that cost of shelter mean for people uh, who are looking at the inflation numbers, looking at the cost of housing, looking at the cost of rental? And the data is suggesting very strongly, in fact, that this particular component of the CPI will persist for quite a bit, right? So I understand if you're in a bind right now, if you are looking to rent, if you're looking even to buy a house, right? There's a lot of hard decisions that you're going to have to make. Okay. So uh, in my next live stream, let's dig further into what's going on with the rental market, and we're going to take another look at the housing data, especially in terms of inventory, and we'll come to some hard decisions, some recommendations about what you can do. Okay, so I hope you found this helpful, and I will see you in the next video.